we go. Welcome to Ask Nelda Almost Anything. My name is Nelda Schulte. And when I bought my first rental property, I was like a deer in the headlights. I made a million mistakes. I made tons of landlording mistakes. I bought the wrong property. And what I decided to do was dedicate my business, which is neldaschulte.com, suspiciously just like the poster banner behind me, to helping landlords bypass some of the landmines that I stepped in so that you can start out on the right foot, start out profitably, start out with a confidence, with a base of knowledge. And to that end, I am also bringing in special guests who are subject matter experts, such as the wonderful guest that we have tonight, Cory Sperle, who is a multifamily expert. Cory started out not in real estate at all, but he started out in a totally other field and decided to get into the multifamily arena about 18 years ago. And he owns about 10 multifamilies at this point. And he also not only is an investor, but he has a business dedicated to helping others who want to get into multifamily investing. So you need to check out Cory Sperle's website. And then one other great thing I want to tell you about Cory is he's offering a free resource to anyone who is on this call. I've listed it in the private chat, and I will also list it in the YouTube replay and in my Facebook and LinkedIn and Twitter groups too. So enough talking from me. Cory, thank you so much for joining. Welcome.
It's a pleasure to be here. Thank you for inviting me, Nelda.
Excellent. So I'm looking forward to hearing what you have to say and grilling you here. So okay. I know you had lots of questions, or no, lots of information about working with a property manager once you have a multifamily, but I'd like to back up a little farther and just ask, how in the world did you get into multifamily investing? Because that wasn't your background, that wasn't your training.
No, I mean, so I'm an instrumentation technician by trade. I've worked in the Canadian mining and energy industries for over 25 years. I took technical school in Moose Jaw, Saskatchewan. I graduated in 1994. So I was pretty much trying to work my way up into decent jobs. I started working in the uranium industry in Saskatchewan, and that led me into working overseas in Central Asia. So at the time I bought my first house, it wasn't intended to be a rental. I did an accidental house hack. I lived in the upstairs and I rented out the basement. Mm-hmm. That was to become my first rental property. Mm-hmm. I didn't have a whole lot of knowledge, so I reached out to, pretty much the only mentorship available at the time was RAIN, the Real Estate Investment Network. Yep. So I started poking around, and I was working overseas, but I was not really able to invest actively. So I was looking for more of a passive approach. And then I came across a gentleman by the name of Thomas Byer, and he was buying buildings in Edmonton, and he was syndicating them and doing joint ventures. I thought, wow, this is a fabulous thing. He had a really solid track record. So I invested $25,000 back in 2004, which was a lot of money back then. Mm-hmm. And, the timing of the market, we did fantastic, but I got the bug for multifamily, and I quickly realized, by that point, I had a few single families. I was dealing with management headaches. I was trying to manage from overseas in an up-down, and it was just a nightmare. So I thought the passive way is the way to go, and then eventually get into multifamily on my own. So that's how I kind of stumbled onto it.
Okay. Well, that was an interesting route. Basically, you saw somebody who inspired you, and you thought that's a way to do it. And also, it wasn't really feasible to do that in a job overseas.
Yeah.
Manage and have a job overseas.
Yeah, and to make it more complicated, I went non-resident of Canada. So I probably could have bought property, but I was only coming home every 6 months. So to do stuff on my own, I had my one property that I just rented out, the up-down duplex that I house hacked, which I was desperately trying to sell at that point because of all the headaches. And then, getting into the multifamily route, I quickly realized how profitable it was, and like how you could increase the value by increasing the rents on commercial real estate. And that was sort of where I first woke up to the world of multifamily, so to speak.
That's great. Okay, well, fantastic. Yes. And you have, I've watched other videos. Cory did a really wonderful symposium that I was part of, that I participated in. And he had a lot of different speakers, and they talked about their backgrounds and how they got into it. And Cory said it wasn't all smooth sailing. He had some bumps along the way. So could I ask you, what was your biggest bump, your biggest hurdle, and how did you overcome it?
Oh, in real estate, yeah, it's never a straight line. I I did the summit, and the summit was an amazing experience because we got to all share our, our successes and failures. And in one of the live calls afterwards, one of the audience asked us what was our best deal and what was our worst deal.
Yeah, I love
So
that actually. That was my favorite moment of your summit, because I really hate going to these summits or symposiums or conferences where everybody's like, "Be like me, I'm fantastic. I've never had any problems." Look at my fabulous house, look at my fabulous car, look at my bling wife. And so I was so glad you didn't do that. People are like, "Oh man, I screwed up here, I screwed up there. I still have that house. I hate it." So I really loved that moment. So tell me about your
yeah,
moment.
so going back to the call, we all talked about, the struggles that we've had on the prairies, basically since the oil crash in 2015. I was already doing pretty well in multifamily by that point. I'd bought several buildings in Edmonton. The market was really good in 2014. We were sailing along, and I got cocky as hell. I thought I knew everything. I decided to move to a secondary niche, which was Saskatoon, because I'm from Saskatoon. I thought, well, I can easily replicate this in another city. I didn't do any research. I didn't vet my property manager. I didn't do market surveys. I didn't do anything. I just went out and bought 3 buildings into a market that had gone down a little bit, right? Because, up to 2014, by 2016, it had settled out. I thought, this isn't going to drop anymore. What could possibly happen? So I quickly learned many of my peers who were buying buildings that bought in the peak of the market in 2014 were completely wiped out.
Oh, no.
They couldn't renew their 5-year mortgages in 2019. Their rent roll was substantially lower. Their values were lower. They didn't have enough equity to renew. So they had to pay their loans down several $100,000
Oh,
or
no.
sell at a loss. So fortunately, I bought smart. I didn't go nuts. So I bought in good areas. So I used that time and that mistake. It was very stressful because we had 20% vacancies in Saskatoon at one point in 2017.
That's significant.
So I was basically I was losing my tenants who were paying $1,200, spending $10,000 to renovate and re-renting the suite for $800.
Oh.
And that went on for a couple of years.
Oh boy.
So I wouldn't necessarily call that a mistake, but my mistake was getting complacent. I didn't do enough due diligence going in. I didn't hire the right property management company, and I let the property management company run for too long before I fired them, essentially.
Yeah, and that can be a real problem. I always see people posting questions about, I'm tired of managing, or I've had all these problems. So, who's a good property manager? And I've been guilty of that mistake myself, where I've just jumped in and hired somebody, didn't do my research on them, and ended up paying for it later. So tell me, I guess that's my first question that I'd like to ask you. How important is letting go and allowing your property manager to operate your property? But what kind of due diligence do you need to do when you're hiring a property manager for an apartment?
Great question. You obviously want to get referrals. You want to talk to other owners. You want to know exactly how their pay structure is. Oftentimes it's tiered. You're going to pay a percentage of your rents, plus they'll have a minimum set amount. So when you have vacancies, if you're repositioning the property, but you want to make sure your minimum amount is reasonable. So you want to make sure the compensation is fair.
Okay.
My management company, they do project management. They do all the upgrades. They do everything for me, kind of a la carte, and it's fantastic. It's totally hands off, very stress free. But yeah, you want to get referrals from other multifamily owners, But then you want to see their track record. You want to look at their portfolio. You want to go online and see their ads. And if they look crappy, you're probably not going to hire them.
Yeah.
You should see really nice, awesome suites. You should see awesome advertising. And you can't really go off Google reviews because the tenants go on Google reviews and slam the property management company no matter who they are. So you can't really use Google reviews.
But I oftentimes wonder too, with some of the bad property managers that I hired, they had good Google reviews. I didn't see any bad ones. And I thought, now how did that happen? Because I know a whole string of us who got scammed here. So how did they get good reviews?
I don't know. That's a good question.
Maybe they wrote them themselves or had some, friend, spouse, neighbor write them. Who knows? But
and in Saskatoon, because it's a smaller. Go ahead. Sorry.
No, I was going to say you check their online ads, take a look at what they do. You get referrals from people who own multifamilies, so that they can tell you what actually goes on and how they structure things.
Yeah, that was what I did in Saskatoon when I ended up firing my management company. I reached out to a well-known investor, a good friend of mine, who had properties were being managed, and I quickly noticed my rents were $100 lower than his was in a very similar building. So I knew that they were under renting my building, and the expenses didn't line up. There was a whole slew of red flags. But I eventually hired the other company after vetting them from a recommendation, and then we had a conversation, which led to me moving my entire portfolio over to them.
How easy or difficult was that to move your portfolio over?
I mean, once I made the decision, once I pulled the trigger, it was fairly easy. But I mean, from 2016 to 2018 was very difficult in Saskatoon. A very challenging market of high vacancies. And, this is long before COVID happened. I mean, we had a massive amount of overbuilding in Saskatoon, a lot of purpose-built rentals. I lost all my tenants to buildings that had, in-suite laundry and underground parking that suddenly dropped their rents from 2,000 to 1,200.
Oh, well.
And I was competing with that. So
Yeah.
it was tough for any property manager, but my management company was still charging me based on market rent and not what my rents actually were. So that was one of the first red flags. It's like, well, we're not in this together. I'm the one who's taking all the losses here. There was very little incentive for them to re-rent the unit, and their ads were just terrible.
Yeah.
So yeah, there was one of many things.
Yeah. So you took a look at everything, kept a close eye on things, and realized it wasn't working out, pulled the trigger when you found somebody new.
Yeah.
Okay. How important is letting go and allowing your property management to operate your property?
Oh yeah, that is the hardest thing to do for a new multifamily owner. And it's not even for new multifamily owners. Like I know several veteran investors that just cannot keep their hands out of the cookie jar.
Yeah.
When you hire a property manager, you're either all in or you're all out.
Yeah.
But most of these guys, I have this on-site manager. He's a good buddy. He's awesome. I'm bringing him along to all my buildings, or I have a renovator, or I want to do things this way, and they interfere, they micromanage. I even had a guy, I was going through a building with him, and he called this property manager like 6 times during the day.
Oh.
And I said to him, it's like, do you do this every day? And he's like, yeah. It's like, well, what do you even need a property manager for? So letting go is so important. And it was hard for me at first because, it's your baby. You put a massive amount of money into this apartment building. If you have one bad month where you have a vacancy and you renovated a suite, you could lose your entire remittance for that month. So it's very stressful. So you're really motivated to get your nose in there and try to help. But you just can't do that. I mean, once you've vetted the right person, you have to hand over the trust to them and just, handle the way they're doing things until you reach a certain point. But I can't stress that enough, is letting go and just letting them do their thing. This is what they do. They manage thousands of units. They can renovate a unit faster and cheaper than you ever could imagine. They can negotiate insurance policies that you can't get your hands on. They can do everything better than you can. Now, if I had all my time and I was just managing my one building, sure, I could probably do a better job, but I'm not interested in that.
Yeah.
Right?
Well, that's not where you got into it. So that kind of brings me to your end goal. What was your end goal when you invested in multifamilies? What was your exit strategy?
Well, at first, I just wanted to create kind of generational wealth, through legacy buildings. I wanted to buy buildings, fix them up. That was the model that Thomas and Prestigious Properties used. And it's a well-known model, value add, which is known as the BRRRR strategy today. But I basically just wanted to have assets that I held long-term. So eventually replacing the income of my job. So that was sort of the goal when I got in. And then I got into joint ventures. I got into raising capital and investing, with other people's money as well to try to speed that up.
Good stuff. Yeah, I'm going to go back to what you were saying. You're either all in or you're all out with the property manager. We actually, when we had a property management business, we had a couple of people who own multifamilies, and they were like partly in, half in. The one guy would actually do showings. He advertised at the same time we did. We didn't know this until, at some point we called someone back and they said, oh, well, so-and-so called us. And we're like, what? So, I mean, he couldn't let go. And it really kind of messed things up. It mixed people up. They didn't know who was doing what. One time I went into a suite that I was going to show that he told me was was good to go, and he decided to renovate it and didn't tell me. So there I was with this potential tenant nag all over my face, feeling like a complete fool, and apologizing profusely, trying to think what other rentals do we have that I could show this guy that are in this area, and maybe save face. But in the end, I couldn't save face. We had to cut our losses. We had to say, all the best to you, but we're not.
Well, this is what investors don't understand is it's a two-way street, and the property manager can and will fire you. And the most common thing that I've heard from my property management company is when you get owners that buy and they just think they're going to generate a return with a mortgage. You don't cash flow anything on a building if you have a mortgage. You're always going to use some R&M. There's going to be very little, if any, spendable. So when it comes to upgrading the units, a lot of them are very tight on their cash and they don't want to fix anything. So they have a turnover. They still demand the property manager, rent it. Or there's other issues. There's deferred maintenance, like the roof, or there's cracks or whatever. So the most common way that the property manager fires the owner is by not putting money into the building. And they spell that out clearly in their contract. And I heard lots of stories like that where they're just like, and then the owners are just like, what? I have to go find somebody else? Yeah. Because it's also making them look bad. The management company, they want a certain product. They want a certain tenant demographic. And I totally get that, right? Totally understand that.
Yeah, two-way street, like you said. You both want to look good. You both don't want to look bad. Alrighty. So at what point do you intervene in their operation and start asking questions and taking action?
Yeah, that's a tightrope. And I see a lot of childish people online. They'll have property management issues and then they'll start to badmouth their property manager on Facebook and stuff. And that's not cool at all. I mean, you got to keep it professional. I would say, so in Saskatoon, I waited too long. There was things I didn't like with the compensation. I think they were under renting the units. They did an okay job, but I thought it was mostly a reflection of the market.
Mm-hmm.
But you want to look at your financial statements probably at least every quarter. Like, don't go through your management statement like every single month you get it and pick out, well, they spent $10 on a light bulb instead of $5, and cherry pick them on nickel and dime and stuff like that. But it's the bigger items, it's the line items. When you look at the general ledger of things that they spent for that month, you want to take a close look. And if there's anomalies, you want to probably have a call with them, like a Zoom call, maybe once a month. Say, hey, I want to go over a few things. And 9 times out of 10, they'll explain it to you. But if you start having vacancies and, they can't fill your units, you're talking to your peers that seem to be doing better in the same market. Those are good red flags. And you want to look at the ads that they're using too, whether they're using Kijiji or what platforms. You want to check their ads. And you can even I've even done this, and even silent shop your own building, which is you get a buddy to go to there and pretend they're a renter and see how the level of service was in renting your unit. And, that's a little bit controversial, but at least like if your units aren't renting out, you have to figure out why. Is it from the phone call? Is it the ad, the phone call, the showing of the suite? Where is the tenant being dropped off?
Yeah.
Right. And if you're not turning those leads into tenants, there could be bigger problems.
Yeah. 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 One thing I didn't, when I hired my first property manager, I didn't ask them where they would be posting their ads. And as it turned out, they only posted the ads on their website, on their property management site. So I said, so if somebody new comes into town and they're looking for a place to live, how would they know to go to your website? And they said, it's done. So that wasn't really helpful because we weren't
availability. Yeah, availability is key too. The other issue is there were signs all over town, and the manager I had would not accept texts. Oh. Well, everyone texts now. People are out looking at buildings. They're going to look at 4 or 5. They're going to walk by yours and text the number. Hey, I want to look at a unit. But if you have to call and make an appointment for 3 days later, that person's not coming back.
Mm-hmm.
So it's convenience, right?
Yeah, the convenience. Yeah. Yes. And it's good to find all those things out. So again, probably you didn't know when you hired them. You didn't know to ask those questions, but now you do.
No, not at all.
Yeah.
I do. And I now I wouldn't get it. I wouldn't be involved as much. Like right now, my property manager in Edmonton, I don't know where they advertise. I see my units on their site and they look like $1 million. They're professionally photographed. We did professional level renovations and we're getting the top rents for doing the work, and they're representing us fabulously. So I don't know, they advertise in other platforms, but it doesn't really, if things are running smoothly, I just keep my hands off.
Well, yeah. If it doesn't affect you, it doesn't affect your numbers. Why would you? Yeah. It
Exactly.
ain't broke, you don't have to fix it. So there you go. Or
Totally.
like Red Green says, if it ain't broke, you're not trying. I don't know if you ever used to watch Red Green shows. I love that show.
Oh yeah, CBC. Yeah, going back in the day. Yeah, that was a good one.
Good, clean family humor.
Yeah.
um, what should you do with rents in a flat in a declining market, like in Alberta the past 8 years, or has it been 12 years?
Yeah. So yeah, I have excellent feedback on what to do in both boom and bust markets. So we'll start with the down market that you just said. So what happened to me in 2015, and this was a classic example of me being stubborn and thinking I knew more than the property manager. They said, Cory, look, in 2015, our rents are declining in Edmonton. We reached the peak. We were renting for $1,200 in 2014. Rents had already dropped down to like $1,050. And I thought, well, I know how apartment buildings work. I mean, if my rents go down, the value of my building goes down. No way am I going to accept that. I mean, what are you talking about? And I resisted. And so the tenants all got together and basically made a letter to the manager saying we're all going to move out. And I
Oh
basically called their
God.
bluff. Called their bluff, and I lost half my tenants. I had to
Oh,
renovate the units, and I had to re-rent it for that price anyways.
oh boy.
So my advice in a down market is to be proactive. You don't want to drop your rents first, but you want to constantly do rental surveys in any market. Survey the neighboring buildings. What are they renting for? What incentives are they giving out? Are they giving out first free, last month free? Tell us, what are they doing? You have to stay competitive. And I wasn't competitive because I thought, well, my building is better than everybody else's. And wrong. I mean, I learned a hard lesson. So be proactive, drop your rents to whatever the market will bear. So that would be my best advice for survival. And try to do everything you can to retain those tenants. Get them to lease up early, give them incentives to lease up. I mean, in Saskatoon, when I lost my tenants after their leases, I couldn't replace them. I sat with a lot of vacancies and I just couldn't refill the units because the market was so bad.
Ouch.
So you really want to be proactive and adjust your rents. And I would have actually been better off of Saskatoon if I had to drop my rents $200 immediately. I wouldn't have gone through as much pain and suffering because now we're starting to rent back up again.
Yeah.
So in a down market, you want to be well on top of the market. And that's also a great time to do your upgrades, even though that's not when a lot of people have money.
Yeah.
But in a down market you can get better pricing on upgrades. So that's a good time to do that as well.
And then unavailability of contractors, which is really hard to get in an up market.
Yeah, absolutely.
You have to wait your turn on line for them to call you back, and wait again for them to come. So yes, it can be quite a rigmarole getting all that done. Yeah, actually,
100%.
I just went to a Calgary Residential Rental Association. It's an event. They did a big event today with tradespeople and with people who own multifamilies and single families and all kinds of landlords. And I made it a point of every time I sat down to listen to a speaker, I sat beside somebody different in a different part of the audience and I asked them questions. And one of the questions we asked each other was, did you raise your rent every year? Because it's always recommended that you raise your rent a little bit every year and you put it in your lease. And I said, during COVID, no, absolutely not. I did not raise my rent. And I mean, it's different for me because I have single family dwellings. I don't have multifamilies. But I also took a look at who my tenants were. And I thought, could they afford a rental raise? Or are they just doing the best they can right now with the rate that they're paying? And do I really want to lose them in hopes of getting somebody else in and paying, another $100 or $200 a month rent? And I didn't. I wanted to just keep it steadily rented. So I kept the rents the same.
You want rounder tenants. You want tenants that stick around. I'm going to steal that from Terry Peranich. Rounders, tenants that stick around and they never move. And that's how you make money over time.
That's how you make money. Sure. Yeah, if they're always in and out, you're paying for renovations, move in without inspections, cleaning. That's what costs you money. Is all the and the vacancies, waiting to fill them, and all that other fun stuff. So yes, works the same for multifamilies then as it does for single families. What other benefits can your property management? Well, you mentioned some of them. You said renovations. They've got industry insight as to what's going on in the market. They know when it's going to peak or dip, and so those are two really good points that you made. What other things can they provide for you?
Oh, a ton of services. As when I first hired my property managers, I thought, they're going to manage the company, but this is kind of where it ends. But they're also licensed real estate brokers. You have to have a license to be a property manager. So they have access to sales data. They can provide that to you. Rental surveys is so powerful. So let's say I'm going to buy a building in Spruce Grove, for example. I can just call them up and they can, within an hour do a survey of what the rents are. So I can quickly calculate how much I should be paying for that building. It's massive, right? And it's going to give me a good indication, and also the vacancy, not just the rent levels, but the vacancy. So if the pro forma says the rents are $1,200, and he says, well, Cory, I'm managing 5 buildings in the area and the rent's only $1,000, the pro forma is probably wrong. I need to go off of the actual rents. And no one knows that better than the property managers. So when you're doing your recon, when you're doing scoping out your niches, when you're looking at areas to buy, that advice is invaluable. And when you go to get a building under contract, they're going to also walk through it with you and tell you if you're paying a good price, because they know valuations inside note, because they know other owners, right? So they can tell you, okay, Cory, this is going to take $6,000 a unit. Oh, well, I guess I have to reduce the price. So that's when you negotiate, a reduction. And finally, they have access directly to sellers, because they manage thousands of units. When one of their owners wants to sell, they'll ask them, hey, do you know anybody who wants to buy? They'll avoid paying the commissions. I've got several opportunities to buy buildings through my property management. So those are some of the hidden benefits and why you need to have a very powerful and awesome relationship with your property manager. 100%.
Well, those are excellent benefits. Actually, I was sitting beside a guy at the conference today at CRA, and he told me he worked for a property management business. And he said, are you looking to buy an apartment building? Because I've got one for sale I could tell you about. So yeah, I didn't even know this guy from Adam. I just met him and was asking if he was enjoying his lunch. And he tried to sell me an apartment building. So there you go.
Forward me the listing, please.
It's in Calgary. Do you want to buy an apartment building in Calgary?
Absolutely. I would love to buy an apartment building in Calgary. I've looked at some larger properties out there, but it's definitely on my radar, 100%.
I'll dig up his card, see if I can find it. I don't know if they had a card.
Cool.
Okay, I'll see what I can find for you. I like the mistake question. This is where, people say, okay, I'm not perfect. And you don't have to be perfect either. What are common mistakes new multifamily investors make when they hire a property manager?
Well, telling them where to set the rents. Like they buy based on the realtor pro forma. They didn't do a rental survey. They say, okay, Mr. Property Manager, I need you to rent these units for $1,400, even though the market rent in the area is only $1,000. So that's the most common one that investors do. They don't do rental surveys. They buy the building without getting an opinion of a property manager, without getting a loan opinion from the bank. They go in completely blind. And then they basically expect a property manager to overcome their mistakes. And I know that because I did this on my first 11-suiter in Edmonton. It was a foreclosure, but I didn't realize that the owner, which was the bank, basically just shoveled in warm bodies. So they got in people that had horrible credit, probably criminal records. They were paying higher rent, but it was only because they couldn't rent anywhere else. So as soon as my manager came, I suddenly had 50% vacancy. And it's like, well, why can't I re-rent to the level I was renting at? And he's like, well, this is the market. So it was very stressful.
Yeah.
So that's a common one, is just the rental survey and not being able to let go. Like, okay, like there's basically 3 things: not vetting them properly, not being able to let go, and not being realistic about the rents of the vacancy of their building. So I see this a lot. There's some management companies in Edmonton where some guys from BC they bought in like Central McDougall. It's been in transition for as long as I've been investing, 20 years. And it's never going anywhere, in my opinion. So they buy based on someone's opinion, and now all of a sudden they buy this building, and then it's all of a sudden it's 50% vacancy and full of squatters. And they call me and they say, what happened? What should I do? I've had that call several times.
Oh, really?
Not fun.
Distressed owners. What do you tell them to do?
Well, I mean, on top of buying in a bad location with high vacancy, they also overpaid. How do you overcome overpaying? You can't mortgage your way out of it, and you can't sell your way out of it. Once you buy a multifamily building, you own it.
Yeah.
So this was part of the reason what drove me to doing this education course, and actually bringing people up to speed on on exactly how you should be buying. Really that situation is you got to just get the best management you can. In those areas, those rougher areas, you can make money in rougher areas, but you have to be rough yourself, or you
Yes.
have to hire someone who's rough
Yeah.
that
Yeah.
will walk into that building and walk out with the rents.
Yes.
That's
Yeah.
the
Because
best chance.
I actually I write about that and I talk about that. I run a course for how to screen tenants, and I back up and I go even farther and I say, what kind of tenants do you want? What kind of tenants do you want to manage if you're going to self-manage? Because you're going to attract the kind of people that you are and that you like. And I've known people who've invested in parts of Calgary like Forest Lawn that are really not the best area of town. And they didn't grow up there. They have no familiarity with that population, that demographic, and they struggle with it. They don't understand the culture, and it's not the right investment for them. So it's so important to get the kind of property and the kind of tenant who is attracted to that property in that area that you like to manage, or that you want to manage, or that you want to represent, because it's a long-term relationship. So who do you want to be in bed with?
Yeah, I mean, some people want to do, like, they'll go in North Edmonton because it's close to the military. They like military tenants. Other people will go near the university because they like students.
Yeah.
Everyone has a different tenant demographic and a different niche. I do mostly blue collar workers. That's kind of my area of expertise. But everybody's different. I mean,
Yep.
people have done very well in those challenging areas like Forest Lawn, but it takes an entirely different management strategy for sure.
Yeah, I've got a friend who's an investor. She owns a business where she also helps people find investments in Forest Lawn, and she does extremely well. She's worked out a really good formula. She and her husband live in that area. They love it. They've invested in only in that area for many years and have done really well for their investors. So yes, it just depends on which niche and which area you like. And like you said, there's tons of areas, tons of niches that you can choose.
Yeah, absolutely.
Can I back up even further? Because I think probably anybody who has never thought, gee, I don't have $4 billion. I can't buy an apartment building. How do you buy an apartment? How do you start with the first multifamily if you've never done that before? You're just entertaining the thought, or you don't know any people with millions of dollars sitting in a bank account who can give it to you to find an apartment building for them and joint venture with them. What do you do to get started?
Well, there's lots of different. That's a great question. There's a lot of ways to get started. I mean, I got started. I scraped together absolutely everything I had. I borrowed from friends and family to buy my first block and went through the baptism by fire that way. It's a very common misconception that you need that much cash, because in a lot of times it's not the case. Creative financing, one realtor in Edmonton, Chris Davies, I talked to him recently, and he's going to be on my call later this week. But he says 50% of deals now are happening creatively through an agreement for sale or a vendor take back. So you can often get seller financing, sometimes on a distressed property, up to 100% financing in the right circumstances. 90% is pretty common. Your standard purchase is 25% down, 15 with CMHC. But now CMHC has a brand new product in MLI Select where you only have to put 5% down and up to a 50-year amortization. But
wow,
the primary
years, 50?
Yeah. So the primary difference between residential, they're looking at your income. Once you reach a certain income level, you're not borrowing anymore. I mean, multifamily, they don't really care about that. They're looking at the income of the property. So it's really just net worth. As long as you have a net worth of 25% of the mortgage. So if it's $1 million mortgage, you need a net worth of 250 grand. That's it. So I find, for me personally, qualifying for a multi is a lot easier.
Really?
So, I mean, there's a couple ways. So you do what I did. You scrape together as much as you can. Or you can pool together with other investors. Like, let's say you don't have $1 million, but you have 3 buddies that are, you all want to do this together, and you each have 100. That's a great way to get in. That's a great way to start too. You can raise money from silent partners that I did as well, but you want to start having those conversations with those partners before you buy a building.
Yeah.
So,
but there's
a lot of different strategies.
How do you convince them to give you money to buy an apartment building when you've never run an apartment building before?
Because you run off your track record of success in other assets. So if you were successful with single family or even raising capital, I mean, the common one I hear is, hey, I raised like $10 million. Well, it's like, well, what did you do with that money? How much of a return on investment did you give back to your investors? Raising capital is a completely useless metric. But if you have a track record of single family where you bought some townhouses, you rented them out, you renovated them, or you did some house flips, and you can demonstrate a return on money with real estate, you can easily convert that, into multifamily.
Mm-hmm.
But like I said, it's not a matter of, you always want to have those conversations first. You don't go out and find a building, then call a bunch of people, but you can't sell something you don't have either.
Right.
So you want to really start talking to people, do webinars, give out your cards and say, look, I want to buy a building. I want you involved. This is how I'm going to structure the deal. By the way, these are the deals I've done in the past. Are you interested? Would you be interested to talk further? And then you get them to sign a letter of intent, which is not an obligation, but it says, hey, I'm interested. If you find something really juicy, please call me. And you plant a bunch of those seeds so that when you do finally land that home run deal in your lap, it's easier to raise the capital.
Right.
It's not easy. But, some people say you have to have all the money lined up and sitting in a bank account and then find a building. That doesn't work. That's not practical in real life because it could take you years to find a good project.
Yeah. That would be my other question. How do you find projects? Or is that an insider secret that they have to pay for your course to get access to?
I teach 8 different sources of deals in my course, but I can go through the most common ones here, certainly. It is work. I mean, it's a process of elimination. So you're basically planting seeds everywhere. My strategy relies on knowing my valuations within plus or minus 10% before I make an offer.
Okay.
And then putting out many offers. You can't buy a building until you make an offer. There's 2 million apartment units in Canada. Every single one of them is for sale. The biggest reason I hear people holding back, the biggest objection is that, well, there's scarcity. There's no apartment buildings. No, there's actually an abundance. There's actually an abundance of buildings. And you never know how much someone's gonna pay or is gonna accept until you make the offer. So the main reason, the main source of deals is still multifamily brokers and realtors, right?
Okay.
And I don't see that changing anytime soon, just because the level of sophistication in a deal. Now, I've tried to sell deals privately through email and through Facebook, and I mean, you might get one solid lead out of 100 that actually has the net worth to close on the deal, right? So you get a lot of tire kickers, and realtors deal with tire kickers all the time. So what you want to do is you want to separate yourself from a tire kicker to get on realtors' lists. They all have buyers lists. They have their A clients, their B clients, C, yada, yada, yada. So when a building comes up for sale, if you're on that list, you're going to have first dibs on it over everybody else. That's your best chance to get a deal. Now, it could take you some time to get on that list. So I suggest working with maybe someone who's maybe not as well known, but still does have multifamily. They know about it. And you can set up an exclusive deal with them to hunt for deals. There's for sale by owner. Go and walk neighborhoods, talk to owners, do yellow letters, drop off flyers saying, hey, I'm so-and-so, I'm looking to buy your building. But most of all, just go out and talk to people. If you see somebody cutting the lawn, he's probably the owner. Just start collecting leads. And then it's ask Terry Peranich. I mean, he has a calendar and he has certain days. I call this guy on the same day every year and I ask him if I can buy his building.
Oh, really?
And he's bought half his portfolio that way.
Oh, really?
Yeah, it's all about relationships.
That's amazing. Yeah. That's amazing. He just has one strategy that's worked extremely well and he just sticks to it. And that's that.
Well, that's one of many, but like I said, it's seeds. So that's one seed, but you have other seeds as well.
Yeah.
And you're just continually making offers that are intelligent. And oftentimes the sellers and the realtors, they'll get angry at you. They'll say, you don't know what you're talking about. You're way undervalued. You're lowballing. Don't waste our time. And I politely say, okay, if you change your mind, call me back. I've bought 3 buildings that way in the last 5 years where they've eventually come back. The deals, because what happens is the deals collapse. They keep collapsing. They keep collapsing because they can't get their financing. They can't raise the capital. They weren't ready to begin with. They just got a divorce. COVID happened. There's 1,000 different reasons. Yeah. But if you're educated, you know the value, and you're able to pick up the rebound, and especially once you close on a deal, then all the realtors know who you are. Then you're going to get more deals funneled to you.
Right. So you actually made good your promise. You said you were looking for a multifamily. You bought one. Good. You're on our A list now.
Yeah, exactly. 100%.
Okay. So What's the biggest gain for you having multifamilies as opposed to single families?
The biggest
Or
what,
is that a
sorry?
hard question to answer?
Can you just repeat? I didn't hear what you said. Sorry.
Oh, sorry. What's the biggest gain having multifamilies over single family dwellings?
Are you talking profit wise
Well, lifestyle,
or
profit,
advantages?
yeah, maybe everything.
Yeah. So definitely the financial freedom and hands-off management, literally hands-off, like hassle-free landlording is the number one thing for me. Now I have a son he's got health challenges. He's in and out of the hospital a lot.
Hmm.
And I can't work a full-time job. In fact, in 2018, I had to take a year off. And then when I returned to work in 2019, my company just finally got fed up with me and they fired me 3 days after Christmas
Oh
on
boy.
December of 2019.
Oh gee.
And then 3 months later, COVID happened and I couldn't find a job to save my life. So that was a blessing in disguise. And I'm glad that happened that way because the buildings in my portfolio saved me. I was able to spend that year with my son. And that's the reason why I do this. It's the freedom. Like we said at the beginning, you have a home-based business. And the fact that you can create value exponentially quicker on a multi. Like we just bought a building in Leduc for 1.49, just under 1.5 million, 17 suites. We're just about to refinance it at 2.5 million
Wow.
in like not even 6 months.
Wow, that's
So
fantastic.
you just can't do that in single family. Now,
No.
single family in the last year with COVID pricing in Kelowna and Vancouver, yeah, maybe you could have, but that's not sustainable,
No.
right? And that's speculation, in multifamily, and especially now in Alberta, because look at right now, rents are still considerably lower than they were in 2014,
Mhm.
and prices for buildings are lower than they've been since 2006.
Hmm.
So it's a perfect buying opportunity and a tremendous amount of upside. We're just at the start of a massive upside curve over the next 5 to 10 years in Alberta and
Yay.
Saskatchewan. Yeah.
It sure took a long time. I remember
Well,
reading all the projections about recessions and then COVID hit, and I'm like, oh, are we ever going to recover from this? But I am starting to see that, and all the stats that I'm reading, any of the reports that I've read, all indicate we're traveling up. Thank
the
God.
only thing that kept me going was I printed out my mortgage statement of the pay down because every call I got from the property manager was bad news in like the last 6 years. So I had this mortgage statement, and my property manager, he sends out an email every year of an update. And he's like, I want to remind our battle worn investors to reflect on history. He says there's a recession in Alberta every 10 years, but when it goes up, rents and values always exceed where the previous peak was. So that means within 5 years, we're going to be back above 2014 levels. That's the way it's been for the last 40 years, and that's the way it's going to be the next 40 years.
Right. So if you look at
I
the
think.
historically, it always goes up. You just have to wait it out.
Yeah, but you have ugly periods like where you can get wiped out if you paid too much, right? Like I
Yeah.
never saw a period in Saskatoon. You can go back 40 years where we had 20% vacancy. That's never
Yeah.
happened. And rents dropped that fast over a 3-year period. It's
So
been steady Eddie. Like, hmm?
how did you survive with 20% vacancies?
Yeah, so I had a healthy reserve fund. I realized that it wasn't enough. I always have 5% of the purchase price as reserve. I've
Hmm.
now modified that to 7.5% of the purchase price
Okay.
for reserve, no matter
Hmm.
what. But I probably blew through 200, maybe 300 grand in that period because I was constantly renovating suites. I ran out of all the cash, and then I just ended up subsidizing it on my own. I didn't go back to my investors for cash calls. I just kept track of it. I did what I had to do. I figured I'm not going to go back to them for more money. And then, things eventually improved. We were able to refinance. But a lot of people, weren't able to do that. I had a couple
Hmm.
buildings that were really struggling. Excuse me, one that was okay. But Edmonton, I had a mixed commercial that got hit even worse because my commercial tenants' businesses were suddenly shut down.
Oh boy.
The government offered us no help whatsoever. And in fact,
Mhm.
Doug Ford came on TV and said, don't pay your rent. Thanks, Doug Ford.
Yeah.
And and then so my businesses were shut down. I went to the mortgage company to get a deferral on mortgages. It's like, no, we're not going to
Yeah.
do that. And the government wasn't giving me anything. So I had to give my tenants free rent for three
Oh
months, my
God.
commercial tenants, and I
Oh.
had to eat it. So
Oh.
that happened all at the same time.
Oh
So
boy.
we really got put in a bad position as owners, especially on commercial real estate during that time. It was very bad.
You took a donkey kicking.
But you know what? That's why I'm here today, to tell the tale. I survived, and we're right at the beginning. I've learned a lot of lessons, Nelda, since 2016.
Yeah.
I'm a lot more cautious. I'm a lot less cocky.
Mm-hmm.
I think I'm smarter. I'm making better decisions. I'm reaching out to my peers. I'm reaching out to experts, guys that I mentored under, and I'm asking people, "What do you think? What should I do?" Instead of just assuming that I know the answer.
Yeah.
So that's been a game changer for me.
Okay, relying on the wisdom or consulting on the wisdom of your peers, which is great.
Yeah, absolutely.
You always need somebody, no matter what you do. And this kept coming up, and when I was talking to property owners at the conference today too, that you always need somebody who knows more than you, or even somebody you can bounce your ideas off of, because you might have an idea how something works and how you want to resolve something, but it's really good to kind of bounce that idea off of somebody who has 10 years more experience, 20 years more experience, has a different perspective. Yeah, I always need people that I can rely on. So I'm glad that you
100%.
said that you rely on people, and that you always have people in your circle, in your arena, that you can count on and get really good advice from.
Absolutely.
So if people want to take your course, what would they expect to see in your course, and how could they access it?
Yeah, so it's an action guide. You just have to go to if I'll give you the link when we go at the end here, but it's the Real Estate Outlook /6 pillars of multifamily. It's on my website. If you go to altonequities.com and just go to the 6-pillar mentorship, you can find the link that way. Okay. So it's basically it's a 6-week program. I have 6 modules. So they're all about preparation, acquisition, due diligence, property management, and financing and selling. So I basically cover all the bases. Mm-hmm. And it's an action guide. It's all real life case studies that I've done. Everything I teach is based on my own experience. Mm-hmm. I haven't, recycled anything. I didn't invent multifamily real estate, but my course is great. I have a coaching call every week, 90 minutes. So on the topic, so I have guest speakers on each of the calls. So it's a really awesome community. So we also have a Facebook alumni group that we all post questions to each other and post deals, look for joint ventures. So it's really a collaborative effort. I have 35 students right now. I'm going to be relaunching the course on October 4th. So I do have a waiting list for that. I already have several people waiting. So if you want to join up, or if you just want to ask me questions, the link that you're going to give it's my 7 tips, 7 real estate tips. It actually leads to a webinar that I talk about my course as well. Okay. So it's tremendous value for people if they want to get into multi, because I share my story, my raw riveting story, and all the mistakes I made. So it's a great watch. So thank you for the opportunity.
Oh yeah, no problem. It also sounds like your course offers it's a support group for people, so they can not only get help from other people and with the specific sections, but if they've got deals, they can potentially joint venture on deals. And is that correct?
Yeah, and yes, and there's a lot of people doing courses these days, and a lot of them I say, well, I can't go to your website and find your track record in 10 seconds. I'm not going to buy your course. You need to have a proven track record of buying, selling, and making profit in any market before I'm even going to consider taking your course. Most of these fly-by-night gurus have none of that. And in the Facebook age of COVID, they're everywhere. If you don't have a track record, you really have no business teaching. But yes, so for people that want to raise joint ventures, I actually have a special bonus in my course all about raising capital and putting together joint venture syndications. It wasn't the focus of my course, but I'm finding a lot of my students are interested in going that route. They want to look at how to do that. And you have to do that carefully. There's securities regulations. There's been a lot of hot water over that, recently, as you know, in Saskatchewan. So we really want to steer clear of any potential gray area, at all, right?
I'm glad you brought that up, because that was I read all about that. I actually posted that article on my Facebook group, because that was most interesting. I feel bad for investors, but it's opened up another opportunity for people who want to. There's a lot of properties for sale now.
Yeah, I don't know if you want to own those. If we're talking about the same thing.
Yeah, they look pretty bad. I looked at some of the boarded up properties, and I thought, yeah, a lot of people. I read all these Actually, I'm glad you brought up that a lot of people have courses, because I always see these American companies that swoop into Canada, and they've got all these great ways of how to buy, rent, fix, flip, wholesale, whatever, but their rules don't apply to Canadian legalities. And so if you follow those, you could be in a lot of hot water. They're not going to go after the guy who ran the course and charged you $40,000. They're going to go after you if you made a mistake. So that's why it's so important, like you said, to check out the person's track record and to make sure that they have a track record in the country, in the area that you want to have a track record in. So
yeah, and it shouldn't be their primary business shouldn't be selling courses. I mean, I do this because I love helping people. I'm not getting rich off of this. I'm still out buying my own buildings, and that's what I love most. And the best part about my course is my students are going to become my future joint venture partners.
Oh, that's great.
And they're going to partner. Yeah, they're going to bring me their deals, and I'm going to invest passively with them, or they may invest in my deals. So I have people tell me, it's like, Cory, you're nuts. You're creating so much competition. You're telling everybody your secrets. You're not going to be able to buy a building anymore. Well, no. If I convince every single person to invest the way I invest, everyone is going to be better off, because we're all going to be making very intelligent offers. And I mean, the buildings are going to sell whether I bought them, my students buy them. Someone's going to buy them, so they might as well be from my students. There's buildings, thousands of buildings transact every year, right?
Well, it's an abundance mentality. It's like there's a lot of stuff out there. There's stuff for everybody. If we all help each other, if we all collaborate, we're all better off, which I really
100%.
love. Yeah,
100%.
I love that. I love that thinking. That's wonderful. And actually, that's something I'm working on with a whole group of people in Canada, as we're putting all of our landlord resources together so that landlords can access things from all over Canada rather than having to go to individual little things here and there and try and figure out where everything is. So, and I don't know. Some people feel that it's a big competition. I think that, again, like Cory does, there's room for everybody. And if we all help each other out, if we all share information, if we share resources, we're all better off. And it raises the bar. You want the real estate industry has always had kind of a reputation of being a little bit, not as professional as others. But I think that, there are many people who are working very hard on having a very high standard of professionalism. And Cory's one of them. So that's why.
It's tough. Yeah, it's tough with social media now, especially like with Facebook and Instagram. Back in the day when Don R. Campbell wouldn't put you on stage unless you were properly vetted. Speaking of students, one of my students just gave me a question. I don't know if you can see this, but he says, Cory, what was the recourse on that? Were you able to recoup those rents? I don't know if we're taking questions at this point, but
yeah, go right ahead. Please do.
I think what he's referring to, Luke, you can correct me if I'm wrong, but I think you're referring to the commercial where I had to basically eat the rents. The answer is no. There was no recourse. I wasn't able to recoup those costs at all. So these tenants had just signed 5-year leases, and I said,
wow.
I said to my property manager, well, can't I tack these on the end, and have them pay me back eventually? The answer is no, because I would have lost. They would have just moved out, and I wouldn't have been able to collect, because all my neighboring buildings were doing that. They were all giving out free rent. I had to eat it, and as owners, sometimes you have to do that. Like, you could be in a joint venture deal and your JV partner might want out. And what do you do at that point you're the syndicator, you're the expert. You have to wait. Sometimes you just have to, take the loss. You have to do what's right for your your client, your customer, your tenant, your joint venture partner, whoever it may be. There's going to always be bumps, but your reputation means more than anything.
Yeah, take the high road.
Yeah, it's one oops undoes 100 attaboys, right?
Yeah, that's great. Are there any other questions that you can see that I can't?
No, I think this one came in over Facebook. So
yeah, and I can't see Facebook questions. I have to get my tech husband to install an app so that we can see all the questions that run through, because they frequently come in on our social media channels afterwards, and we're happy to answer them, and I'm happy to forward questions off to Cory. I just can't see them unless people are logged in with Restream. So that's okay. But anyway, as a wrap up, is there a way you can summarize all of the fantastic information you gave? You talked about buying, finding properties, the bumps that you incur as a multifamily investor or as a real estate investor, and then you also talked about the importance of property management, good property management, and things to look out for. So, do you want to encapsulate this somehow for our listeners?
Yeah, I mean, there's a lot of people that are interested. I mean, I got interested partially from reading the dreaded Purple Book. Everyone knows the Purple Book I'm talking about, so that was part of what got me into multifamily. But it's not a get rich quick thing, but it is a get rich for sure if you do it right. So if you can get the mindset around that, and also have the mindset that every single person can do this. The young gentleman Luke, who asked me the question, he's 23 years old. He has never bought a property in his life. And there's absolutely no doubt in my mind that in 12 months from now, he's going to own one, if not many buildings.
That's
No doubt in my
fantastic.
mind.
Fantastic.
So it's not reserved for the ultra rich. A lot of high net worth individuals, doctors, lawyers, they do own buildings, but a lot of like average people like myself also own them. And it's not that complicated. You tell people commercial real estate or multifamily, and it's like instantly there's kind of this fear and apprehension because you envision, multiple tenants and issues and calls and a stack of mortgage papers like this, and this massive amount of debt. You have this $1 million loan that you have to personally guarantee, but it's really a very safe, a very secure, it's a very inflation-proof investment, really, because it always balances rents. As long as you buy, fairly intelligently, you don't over leverage. It's really almost impossible to screw up, because as long as you're cash flowing, you're gonna at least have your mortgage pay down as a bare minimum. So I would say to anybody, every single person can do this. Don't get discouraged. Don't just look at MLS, and just you can reach out and talk to me. I'll give me a call, text, email, whatever. I'd be happy to give you some advice. I love talking about the stuff. I could talk about this all day long. So I hear a lot of objections why people don't want to get in there, but there really are none. Amanda Bolin, who I interviewed for the summit, her first rental property was a 12-suiter. And then within 6 months, she bought another 12-suiter. Now I think she's buying even more property. So versus, what one person might have bought one or two townhouses. So the economies of scale really kick in when you get into multifamily.
So when I was in my early 20s, I just finished my master's degree, and or late 20s, and I came back to Edmonton, and my dad's wife's oldest daughter got married. She and her new husband decided, rather than buying a single family house, they wanted to make their money work for them. So they bought a multifamily as their first investment. So I think it was a sixplex or something. They lived in one of the units, like a lot of people do, and then they rented out the others. He graduated with instrumentation, sort of similar background to yours, and so he's kind of a fix-it kind of guy. They did their own maintenance, and then they paid that one off, and I don't know how long, a fairly short period of time. They're very good with money. And then they bought another one, and they also bought a single family at that point their family had expanded and they wanted to buy a bigger house and live in a nicer neighborhood. So they bought that too. So now they own several multifamilies. They're all paid off. They own their single family that's paid off. So if they just would have followed the regular route of like buying a house, paying it off in 30 years, they wouldn't be worth like $5, $6, $7 million that they're worth now.
Powerful stuff, isn't it? Powerful
stuff.
And
I think about that all the time, because I think I'm just going to add one little story. In the neighborhood that I grew up in, we had a next door neighbor who lost his job, and he asked my dad and my mother at that point if they just wanted to assume the mortgage. They didn't have to qualify it. They could just assume at that point and own the property, and that would have gotten him out of a bad situation, and he could have moved on. And my parents said no, because they were very risk averse. My dad grew up during the Second World War. My mother grew up during the Depression. She grew up hungry and poor. And there's absolutely no way they wanted to do that. They thought it was a huge risk. But long story even longer, they paid off their property. My dad was, he's been financially in a very good spot for many years, but he could have been so much richer with two properties than he would have with one. He would have had the rent from the other property. He's very good at fixing stuff. He's very good with people. And he would have had that property paid off. He could have sold that one for, I think he bought the original one for $40,000 in that neighborhood. And now they sell for $400,000 or $500,000. He would have had the rent.
Well, the best time to invest, right, was 50 years ago. But the second best time to invest is right now.
Right now, yeah. So I love what you said, where you said there are always deals. You can always buy something for sale. And basically what you're saying is you have to have the education, yes, but you have to have the right mindset to do this as well. You know, you have to
Yeah,
say,
and you have to have some patience too, because it is a get rich for sure, thing, but there is work involved. It's not one of these things where, you take my course and then just cash starts flying out of your phone. It doesn't work like that. There is work involved,
Yeah.
but it's well worth the work.
Yes. So you do the work, you're persistent, and it will eventually pay off. Yes.
Yeah,
So that's good.
100%.
I like what you said. Not get rich quick, but get rich for sure. So, Cory, thank you so much. So they can reach you at altonequities.com.
Yep. ALTYN.
ALTYN equities.com.
Yep. Mm-hmm.
And that's how you can reach him, ask him questions, and take his course if that's the type of thing that interests you, or get on his waiting list for the next one, potentially. And I'd like to thank you very much for joining me, Cory. And for those of you who are watching, if you like this, please like us on YouTube, like us on Facebook, share, like us on Twitter, like us everywhere. Just like us, okay? Subscribe to
2
my
thumbs
channel
up.
if you really liked it, and share it with everybody you know, because it's really good to help people out with giving them some education and aligning them with really good people. So thank you all for listening. And once again, thank you, Cory, so much for joining me. And to our people who joined us, thank you very much for being part of our interview tonight, our Ask Nelda interview with Cory Sperle at altonequities.com. And we look forward to seeing you at the next Ask Nelda
Thanks,
in 2
Nelda.
more weeks. Thanks so much, Cory. Okay, bye-bye.
Okay, bye now.